G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please sure check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So, another weekly video and we'll get right into it. And we'll start with the Fear and Greed Index for Bitcoin. And right now, throughout this whole week, we've seen some pretty fearful price action. And you can see on there, we're at 44 now. So we're sort of neutral, which is 50, to getting below that and heading towards the fear territory. So we've only just entered it. And it said here yesterday we were at 49, so we were neutral. Last week we were extremely greedy, and last month was greedy. All right. So if I can scroll down to the crypto fear and greed over time, you can see we are in a bit of a downtrend now. Okay. So we had a peak in January this year. If I go back 3 months to give us a bit more perspective, we had an even higher peak in November, which was 94. We got to the really high 90s, which is you don't stay very often. Okay. And you get there, then you go down, and then lower high. Even though it was a higher high in price, fear and greed was lower high for Bitcoin, 87, and then it's just been going down. Okay. And we did enter 50 neutral mid-January, or early to mid-January, and shot back up again to the 80s, and then now we're slowly starting to go down. Okay. And there's lower highs, you can see. Highs are going lower, 80s, 70s, early 70s. Now we're in fear territory. Then we get below 40, 30, and then 20. You want to see that sort of stuff, and that'll be a time where we'll see price drop dramatically, and we'll see a lot of shakeout occur in the markets. And we need to see that happen, I think. There's been a lot of speculation, hype going on at the moment. It needs to flush out a lot of these people because it's pumping and dumping going on left, right, and centre. All right. And we're seeing a lot of greed. There's all-time highs of Bitcoin and multiple alts. I would say 99% of them, or even more than that, 99.5 or even higher than that, have not got nowhere near their all-time highs. I'm talking about alts from last cycle, or alts that launched last year. They're not near their highs, okay? They're down close to their lows. Bitcoin is near its highs. If you want to go back a year, you can see that we are clearly in a downtrend, okay? So the lower highs, 90s, peak 80s, 70s, and a little spike up there, okay? But ultimately, you're going down, okay? So we are getting a downtrend. And you want to see these levels we saw in July. Okay, it was below 30, in the 20s there. That was 20, 17, I should say, August, and then September. Okay, so we had those 3 dips there below 30. All right, so I want to see that, and then better opportunities then. But at the moment, the market's still overheated, in my opinion, and the fear and greed is a good little indicator to suggest that at the moment. Because if you break it down, so I haven't showed you guys really the breakdown of what makes up the fear and greed index. So you got volatility is 25%. Okay, so it's corresponding to 30 days and 90 days. Okay, the drawdowns of Bitcoin, and you got market momentum and volume is 25%. So same sort of period, 30-day, 90-day averages. And then social media makes up 15%. Okay, so it's engagement with social media. There you go. Surveys, it's currently paused for some reason, 15%. And dominance, so we've got Bitcoin dominance, my favorite thing, because it keeps going up and up and up to the right. And we've got trends, okay? So look at Google Trends data and compiling that into this metric. So it's pretty powerful, this fear and greed index, okay? It was established back in 2018. So it doesn't go back all the way to the history of Bitcoin at the start of it, but it started in 2018, and it gives you, pretty fluctuating data up and down. And yeah, it can be a very useful tool to make your analysis when you want to enter and exit the markets. That is the crypto greed and fear, and we're at 44. So go to a tweet, and Benjamin Cohen, I've got to say, I'll be honest with you, I reckon he's the best to follow in this space. I'm not even joking. His content is fantastic. It's straightforward. This guy's a bit older. He's got kids. He's in his 30s, but great to follow. He's been, in crypto since like 2019 or 2018 or so. I believe it's 2018. So he's been there for a long, long time. And yeah, he just has great analysis, great chart work. He's realistic, and he's been pretty accurate with his calls. So here's a tweet by him. I think another reason why this cycle feels different is because in the past cycles, there was always at least promise, excitement of what's actually been accomplished with crypto and how it could make things better. This cycle is none of that. It's all about meme coins, ETFs, and strategic reserves. So the goal is getting crypto in front of more people, not actually improving the industry itself. I agree with that. And I sort of do know why that is. It's also the administration, and it's where we are in the real estate cycle. Okay, that's another factor. We're coming towards the end of that. I'll make a video about that. Okay, so maybe next week's we'll cover the real estate cycle. But we're coming into the tail end of the speculation and the mania phase. It goes with the stock markets. It goes with every markets, and real estate's probably the biggest and most. It's up there with the biggest market. Because you got the bond market as well. It's pretty huge. But yeah, in terms of speculation, real estate will potentially peak either this year or next year. But stock markets will follow. And the crypto market will probably sell off this year because usually it stops in Q4 of each post-halving year, which is every 4 years, okay? So 2013, 2017, 2021, and then 2025. So crypto will peak first, sell off. The stock markets could do it in the next year, and then the real estate market follows. Or just, it comes at the same time. Who knows how it's going to play out? I have no idea. But I haven't really seen a lot of speculation, okay, because the interest rates are still quite high. Monetary policy is pretty tight. So it has to be some sort of event to trigger a shift in monetary policy. I think I'm not seeing a lot of speculation. Because the money's still expensive. It's not cheap money out there. And you want to see that going into the peak. All right, so that's still to come. And I'll show that on the charts, the Fed monetary policies. But this cycle is definitely different, okay, because of monetary policy, the Fed, and what they're doing with their balance sheet. And it's not favouring the altcoin market versus Bitcoin market, okay? It's high risk bleeding to the lower risk stuff. And it's the same as the stock market, It's the lower risk assets, the top 10, outperforming everything else, in the stock market. So it's the same idea. Now, onto the charts. My favourite time frame, the 3-day time frame. And you can see Bitcoin, you can see it's quite clear what we're sort of forming right now. Had this parallel channel, as you can see, in these white lines. Okay, and we sort of zigzagged inside of that. We broke down, we established a support level. So you had a touch. We stayed trapped below in this little range. We broke out of the range, came back down. So you have 1, 2, 3, 4, 5 touches, broke above. We're going to the moon. We just wicked the highs. Okay, we went a little bit above the highs. And back down we go. Okay, so we've been touching this floor for quite a number of times. And I do see this breaking. Okay, it's touched that many times. All right, so I do see it breaking. And if it doesn't break and bounces again, it'll be a miracle. Okay. You can see it's quite clearly what we're seeing now is one high, two highs. That's double top pattern. Okay. We've got this neckline that needs to break to confirm that this is playing out. So this needs to break with a candle close. Okay. And then we should see lower levels. Now, I did say in a previous video, 85K could be a level. So we could stall out. We go on the daily time frame and show you. You could see it come back down somewhere around here. So there's a bit of liquidity here. We could see a reaction here, but I reckon it's going to hold very strong. Okay, because we don't see a lot of touches here, and I just see it breaking through and heading somewhere in the late 60s, early 70s potentially. So you got this downward sloping trend line I've drawn here. It touches all the highs from last year. Okay, so you got here. Whoops. Touch it here, 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 and here. Okay, so quite a number of touches. So it's a valid trend line. Righto, we broke above it, and then you can see price, when it broke up, it came back down, okay, and retested it. That's so you know that's the level to draw. And then the candles just went crazy there, you know, just boom, 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 boom. There's heavy green candles in a row, you know. 1, 2, 3, 4, 5, 6, 7, 7 green candles in a row. So yeah, quite explosive move off that level. So I do see it come back down to at least this horizontal, or you can see it come down even lower to this downward sloping parallel trend line. Okay, so in the early 60s or late 60s. All right, so it's either or. Playing out, I see that happening. And look, if you want to, I'll show another reason why. Of course, we'll go to I think the weekly time frame, the appropriate time frame there to show you more. So we do have a MACD that is diverging. All right, so I mentioned this last week, and it's no different. So you got the MACD going down, great color, green arrow going down. It's a red arrow going down. It's, you know, price goes higher, and if you want to connect to this high back here in April of 2023 and change it to a green color, so price is going higher. You got, you know, a peak here, high here, and a high here. So 3 peaks, of course, and the MACD. If you want to extend the MACD out, you can say, okay, you got a peak here, you got a peak here, and a peak here, and they're going lower. Okay, so the MACD momentum. And you can see the lows on the MACD. So this low and this low are also going down, right? Showing momentum is going down. And then it should play out because it's starting to drop. There's a pink line here on the MACD starting to drop pretty heavily, and the blue should follow. And it's clearly triple divergence is playing out on the weekly time frame for Bitcoin. And what happens to price when it diverges this wide? So you go year to year to year. 3 years and diverging the way it is, I see it going down. It's the only causable outcome, in my opinion. So that's another area of confluence. So that's the MACD there playing out, diverging. Another reason why you can say it's going to go down further, as you see, I like going to the 3-day to show this bit clearly. But if you go back to the 3-day time frame, wait for this to load. So sometimes it takes a bit to load. It's not updating quite yet. It's a bit slow. I don't know why it does that. Switch time frames and it just doesn't load properly. There we go. It loaded. So we're at 59-ish. Okay, as you can see, I'm hovering over it. 59 reading on the risk metric. Okay, so it did get overheated up here. And that was right at the top. Okay. I did get overheated, as I showed you here, and then all throughout this period, which was this upwards momentum phase, okay, pushing in this tight parallel rising channel. Now that we're coming back down, the price is dropping as we're speaking right now. Risk metric is going lower, okay, and I do want to see the risk metric in this under this green level, okay. So you can see the green level, and I'll use vertical lines to show you. So had a level there, and when it went to green below this 30 level, okay, price was bottoming there. We had it again here. We entered here, just here, and then price wicked down and bottomed. That was the actual low, and then we had it stay below this level for a bit of time, okay. So stay below. So keep buying all the way through here until we exit that level, and then you'll stop buying. All this level is great buying. It's some very low levels, and then bam, off to the races. Risk metric goes higher, so there's price. Now it's starting to drop. Okay, so I won't be touching Bitcoin. Well, I won't be buying Bitcoin, but I won't be touching any coins to purchase for this bull run until Bitcoin gets below 30. Okay, so that is the target, and below. Even if you go to the blue, which is not very common, what we did back here, okay, in the bear market, we got to the blue, see there, it's quite clear. This is the bottom. We got some really deep blue. Now we did get deep blue here as well, okay, back in June, but the ultimate bottom was here. Okay, so you could get these levels as well, depending on the fear kicks in the market. It's possible as well. So another reason why, just to stay cautious. I'm not going to present any bullish arguments because, let's be honest with you, I don't see any bullish arguments. Due to, I showed you the tweet before. It's just all about meme coins and just hypes of scheduled reserves and upcoming ETFs and stuff like that. But I see more or less all this stuff being pretty much priced in to the market, especially with these influencers pumping and dumping meme coins. So there's a lot of that going on, and it's not good, not healthy, and we need a flush out. Okay, so markets need to cool off. So we're seeing that for Bitcoin, and look, that's pretty well it. It's those factors. And so we'll go to ETH now. Have a look at ETH, and you see ETH's dropping quite dramatically now, and you've got this big wick. So usually wicks get filled, and we are filling it right now as we speak. You got a nasty candle on the 3-day time frame, and yeah, it's breaking this trend line upwards. If I go to the logarithmic chart, you can see it fits pretty nicely. Okay, so obviously the very low point we got to 870 odd, and went higher, touched it again. So it's a clear, evident trend line on the logarithmic charts, and we are breaking it as we speak. So we did wick and then closed above it. Okay, now we're starting to break it because it just can't hold on any longer. Next level I've got drawn out is 2400, which is this big green candle. Okay, so where it started, which is here, 2400. If that breaks, which I do think is going to happen, unfortunately, $1,500 is where we're going to head, which is quite clearly this level here. It's just already drawn, and these levels here. Okay, and it's nice takeoff these green candles. Okay, so yeah, it's definitely a level to watch, and it'll still be if you go on the 2-week time frame, and you zoom out a bit, and I'll get rid of these drawings. They just look ugly as hell. And you can see it's quite clear. You had this top here, and we had this pullback to this line. Okay, and the candle closes were at this level. And if it did come back down here, whether it's earlier than that, April, March, I don't know when, we can see it's still a macro higher low. It will be a downtrend because we got this low here. Okay, we're breaking this low. So once you break this level, okay, which is get below this wick, this would be a confirmed lower low. Okay, and then be downward price action. Okay, down to the downside, but it's still higher than this low. All right, if you go to the monthly time frame, it doesn't look all that bad. Still, you zoom out, like it's still market structure looks decent. If you start breaking this level, then you've got problems. Okay, and head back down to here, and it's probably over. Okay, this market's probably over, but I do see a nice healthy correction down to here, 1500, and then continuation. It obviously goes a lot higher than that, but into the end of the year to 2026 potentially. If it drags on a bit longer, it could go into January next year, and we see a peak Ethereum, wherever that's going to be. I don't know what the price is going to be, but yeah, get the idea of that one. Another thing to mention, I want to talk about as well, it's important to note about this price action here, is it's like Bitcoin. It's very similar. We got, it's more or less, it's, you can say it's not 3 peaks, but it's definitely 2, and it's all you need for a divergence to play out. You can see this red line going down. Okay, so that's your divergence. Okay, you got this going down with price either going up or going sideways. So price goes sideways, that's good enough for a divergence. Okay, so 2 big peaks and then going down. So you can see it's crossing, and then pink line's starting to drop pretty heavily, and price is following. Okay, so it's going lower with the MACD, and it shows divergence playing out for Ethereum. Okay, so it's quite interesting there. ETH needs to cool off and go home, as Benjamin Cullen calls it, going home. So that's definitely something that happened for ETH. You got, I'll go through a couple of old coins, and I haven't talked about them especially Solana, for a very, very long time on my channel. I do talk about Solana Bitcoin pair, it's USD pair, of course. I've got this upward sloping trend line, okay, and we're on it right now, but it's just a matter of time before it breaks, okay, and then it heads down to these levels. It's either it bottoms out 110 or 80. That's where I'm seeing Solana go for the macro high or low, and then obviously shoots up a lot higher than that going in the year. And the MACD is showing the same thing. It's going down while price is going up, okay? So quite clearly, it's all playing out. Okay, so that's that chart there for Solana. Nothing much to say about that one. Cardano, we are approaching this level that I've drawn, 65 cents. Okay, so it was basically this wick here, these wicks. Okay, we had a bit of touching here. And yeah, it's starting to come back down to that level. And will it hold and go higher? I don't think so. I think it's going to come back down to this trend line. And then this area here, we had this big candle. Okay, so this big candle here, it should come back down and fill it down to the bottom. And then I see it going back down to the lows, 25 cents. That's where I see ADA going. Quite clearly, quite simply, to sweep this liquidity, okay? Just get rid of this liquidity, come down and wipe these people out. And then bam, off we go to the races. And just rockets from there. ADA. It's going to look quite strange, but it can move fast, this thing, okay? So don't discount it. All right, and yeah, that one's definitely an interesting one to watch. Get rid of these drawings again, and we'll have a look at the MACD on the weekly again. And you see we are, if you really want to look at this, this is pretty well level, okay? So this could be just about even with this high. So these are pretty well the same. Meanwhile, this one's lower. Okay, this is going down. And these two are the same. A price is going higher. So this is a triple divergence playing out, okay? And it's crossing and it's going lower. So another divergence, another altcoin, and these are top 10, okay? So important to note that. You've got 1, 2, 3, and 1, 2, 3, and then price is going down. So another divergence playing out. Look, Dogecoin real quick, and Doge has got a nice divergence playing out as well. So it's just all happening for every single major alt. That's going lower, clearly, and this is going higher. Yeah. So it's selling off as we speak. I do see it's coming back down this golden zone. Clear touches there, and that's around 8 cents to 10 cents. I think it'll bottom around there. That's what I'm thinking. Could go down to the bottom there, 5 cents, but we'll see. I don't know. I have no idea. But yeah, I'm just drawing levels to see where things are. And Doge is really the king of all memes, so really one to keep an eye on to lead the meme coin market. If Doge is doing poorly, then the whole meme coin market's not going to do so well. So Tony Doge is a prominent beacon for the rest of the meme coin market, okay? And that's pretty well it. We'll go to the stock market because we haven't talked to the stock market for a while. And go to the major SPX. And yeah, we are in a nice strong uptrend. Okay, so nothing looks like it's bucking this trend, but something has to buck it. Okay, and while this stays bullish, then it can hold the crypto market up for a certain amount of time. Mostly Bitcoin because it's the biggest by far in that crypto market. So yeah, SP looks still bullish. All right, if you go to the daily time frame, have a look what's going on. We are sort of struggling at these highs here. As you can see, we had made this high back in December, all right? And we've just gone above it, but barely, and we're sort of struggling. This cluster here is really struggling to break it. And we had a nice sell-off in this past session, okay? And yeah, look, we could definitely fill this gap here. Got a gap there and got a gap here. So 2 gaps to fill. And I've drawn a line here, it's orange line, it's 56.50. It's a nice cool off, okay? If you go to the weekly, it'll still look bullish. You know, you've got a little high here, okay? A low here. sweep these lows, come back down, and then continue higher. Now, that's what I see happening in the S&P. And another factor you can sort of bring up as well is a nice divergence playing out. This one's been playing out for quite a while. Okay, so this high here, and it's going low, high, lower high, then these consecutive lower highs and lower lows. The nice divergence playing out, and this is going back to July 2023 and going higher like that. So divergence is quite heavy on the S&P, and it's needed a nice cool off. Okay, just to confirm, just healthy. You can't just keep, you can do it for a period of time where it's like this in 2021, where it just would not get a pullback. It's continued high, and it's very shallow pullbacks. Okay, but that was quite a different period when I had that ease of access to money and cheap money, low interest rates. This is when it really kicked off because we had the pandemic, and we had rates near zero for the banks, and they lent out for around the 2% mark for buying real estate, and money printing was going berserk. Stimulus checks were happening, so that's why the market did that. Okay, we are doing something similar, but it's money's a bit tighter, harder to access, and inflation's higher, and you can argue all these different things, but cool off and continue higher for the S&P. Same as NASDAQ. I see it playing out similar. We do have this sort of trend line here. Okay, logarithmic chart, and we are holding it quite strong. We'll have to wait and see. But do have a lot of divergence playing out as well. This red line going up, and you got divergence playing out. It's high, and everything going lower. Okay, so same thing. The S&P going back from July of 2023 to the current period. We are also struggling at the highs here. On the daily time frame, you can see it hasn't even broken the December high, whereas the S&P has broken the December high. So it is going sideways and struggling. It has to make its move soon and either go down or up. Wait and see. I haven't really drawn a level on this one, but the S&P will be your guiding light for the majority of all indices. So watching the S&P really closely. Russell as well, the small caps. And we have approached and gone a little bit higher than this one. See that we wick above it. All right. And we are struggling at this level here. And we've wicked, and price looks to be up here. All right, but it's making a decision whether it wants to break above or go lower and head back to 2100. Okay, so it's the next support level down this indice, and MACD looks pretty weak, and the price is going lower. Okay, and we are seeing the same sort of thing play out. Okay, so you've got divergence, it's going lower. MACD, while price is going higher. That peak there corresponds to this, and crossing down and going lower. So another divergence playing out. Okay, so that is that. You can look at dominance pairs, DXY, real quick. So DXY now, you've got a cross here, so it might look bearish for the dollar. To wait and see how that plays out, but so far we're above this line, okay, which is quite clearly a resistance turn support. So it was resistance here, okay, and it struggled here, but now we have bounced off it, okay. Was a bit of resistance here, sort of thing. And will we continue to the top 113 and get to these highs here? It's very, very highly probable, especially with the tariff stuff going on. We could see a bit more upside. Depends on the bond market as well. A certain amount of factors, so who knows? Especially next week's inflation numbers will play a role in where the dollar goes as well. So it's all these things you got to take for an account. But look, as long as this goes up, we pain in the Bitcoin could hold up okay, but the altcoin market will get crushed. So this needs to be going down heavily to get our old seasons. Okay, so we get these periods where it just falls off a cliff and goes down. Okay, it falls off a cliff and goes down. This is when alts are doing really well. This period, this is 2017, and bam, they outperform Bitcoin. Same as here. Took a little bit longer, but the idea. Gets to January 2021, and finally it they pick up. But this period is when the high risk stuff doing better than the low risk stuff. Okay, right now we're sort of not doing that. We're going higher. Okay, so it's risk off for now until we get a confirmed breakdown and go lower. At the moment, it's looking quite bullish, and that's to do with monetary policy and the likes as well. Okay, USDT dominance. So it's one of my favorite charts to look at, and I did mention this double bottom playing out. So this low and this low, quite wide double bottom there. Okay, so that was last year's March, and this year December, going into January and February now. And the MACD, it's going higher, clearly, right? The green line there. This is flat, and this is shooting up. So it's divergence, and I expect it to continue higher. And this is level, this target here. And if you get above that, then we go back to these highs here, okay? So these wicks, and probably bottom out there, or top out there, I should say, for the USD dominance, and bottom for Bitcoin. And then Bitcoin just crushes it and just does so well going into the end of the year. Something like plays out potentially. Who knows where it could go? I have no idea. So just a bit of fun. But as long as it's going up, Bitcoin's going down, and we can see this momentum starting to pick up. The pink line starting to go really, really steep. This sloping line here, and blue will follow, and then it'll continue up. So not good for the markets, seeing that. Okay, so that's USD dominance. You see this trend line plays out, touch, so going from December 2017, and November 2018, June 2019, January 2020, March 2021, November 2021, and you follow along, March from last year, and it is a little bit below this trend line now, so we have gone below it, but it's regaining it. So it can't hold this forever, because it implies that it'll continue to gain more dominance over time. But this will eventually result either sideways action or whatever. But for now, we're going up, and got to respect the TA that we're seeing, and it looks like going higher in the short term. Bitcoin dominance is just 62% today, absolutely ripping through, breaking this high here. Okay, from November, and it's going higher. And we did wick the other day, 64%, so quite good scenes there. And look, I just see this thing going. You can pull a Fibonacci and to do a projection as well. Just another way you can sort of grab the high here and pull it down. Okay, 786 is at 66%. Okay, so we have broken above the 618. So clearly here, this November period was 618 and rejected and sold off from it. And we've broken that now, and look, they're heading to the next fib level. It's 0.786. That breaks, and I just see it coming to 70%, and there's dominance, and it'll continue high until the Fed end QT. Okay, so once they end QT or start QE, I'll show you the balance sheet of the Fed, and you can see the balance sheet here. Okay, so once the Fed buy assets, obviously goes up, the money supply increases. Okay, more liquidity for banks to lend. And what happens? Bitcoin dominance drops, okay, as this goes up quite clearly, and vice versa. And when it drops, Bitcoin dominance goes up. Okay, back before that, this goes down, Bitcoin dominance goes up. The tighter monetary policy. This here was sort of going up, and then sideways. Bitcoin dominance was going sort of flat, and then bam, drops. Okay, so it can have flat balance sheets and still have an alt season. Okay, so there's alt seasons when Bitcoin dominance just falls off a cliff and alts outperform Bitcoin. And then it's the opposite when Bitcoin performs alts during QT phases, okay? QE, and right now we're still in QT, so we'll be staying away from altcoins until this line starts to curl up, okay? It starts to curl up, or it goes flat. Either is a positive thing for high-risk assets. For now, it's just continuing down, okay? I don't see much else until they end it. Okay, the Fed ends QT or starts QE, and we'll get an alt season then. But you see influencers shouting alt season, and it just doesn't happen. Never happens. It just, I'll show you on a chart that outlines this pretty clearly. Others, Bitcoin, it's been pretty choppy. All right, but this balance sheet, as long as it goes down, others outside top 10 will underperform Bitcoin. Okay, so people shouting for alt season here. They'll shout it here, all right, and they'll shout it here because we were shooting up pretty aggressively here in December, all right, and then we just boom rejected and went lower. You can pull up the bull market support band. Okay, we did break durably above it, and we did retest it to look bullish, but then just failed and broke down. Okay, this is how it is. It's just not going to go up durably until this balance sheet goes up durably. Okay, so if you zoom out a bit like that, you can quite it goes down when the balance sheet goes down. It goes up with the balance sheet. See that? They both go up. It's not a straight line up, but it's it grinds up. Okay, real slow. Then it goes boom parabolic. And the balance sheet is flat, predictable, and higher. Okay, down, up, down, and it'll continue down and underperform Bitcoin. And I don't know where the low is going to be, but I've drawn a level at 0.08, okay, which is these lows here. December 2020, August to September, October of 2019, and then late in 2017. And then that's the level I've drawn. And I do see it come back down there before bottoming and then outperforming Bitcoin. Next leg up. It won't occur until this balance sheet either goes flat, okay, as I showed you before, flattens out, or goes higher, okay? That is how it's got to play out, right? Otherwise, your favorite meme coins are going to get crushed. So you may as well stick to Bitcoin or just stick to cash. And you can see this MACD momentum is starting to really shoot down, okay, dropping quite dramatically. And once we cross bullish, okay, like that, then you can talk about it bottoming or getting close to a bottom. But for now, until the Fed pivots, not going to happen. All right. It's same with Ethereum. Ethereum's against Bitcoin. This is Ethereum market cap followed by Bitcoin market cap. Okay, so quite interesting. It's like an oscillator. It goes to the highs, it goes to the lows, goes to the lows, goes back to the highs. We are wicking into this box now, so we're getting back to the lows because the balance sheet. Okay, the balance sheet goes down. This goes down. Balance sheet goes up. It goes up. And follows the Fed monetary policy. Okay, so we can go down here as low as December of the post-halving year, and it still went to the highs by January of that next year. So this was down here a lot longer. So we to it in September 2018. It stayed there for a very long time, and then went up. So it had a long base, and it continued higher. Okay, this is taking longer to get down here because the balance sheet's going slow, and it could really go down here until right to the end, September or October, November, and then just go at that. So anything's possible. Okay, so don't rule out not going to the highs. It will go to the highs. Just be patient. But this is definitely getting quite attractive now, getting down to these lows for Ethereum versus Bitcoin market cap. And you can see the MACD is crossing very bearish now, and should go lower for crossing bullish. Okay, so we have to wait for signs that happen, and that's what happened when the next Fed meeting occurs in mid-March. We'll find out if we're going to end QT and go into QE, or if they continue QT longer. This will continue to stall out, and wait for the May meeting, which is the meeting after that, to find out if we're going to enter QE. Okay, so that's important to note, that chart there. And I think we'll end the video on that one there. So that is all the metrics you look out for. Okay, it's important to note that Bitcoin will do what it has to do. Okay, up, down, sideways, I don't know, but it will take market share from the altcoins, right? I showed you this before, and the Fed monetary policy is very tight. And I don't think Bitcoin will hold this level. Okay, we've touched that many times. Go on the daily time frame, you can see what I'm talking about. It's just once, twice, 3, 4, 5, 6, 7, 8 times now. So once you kick a door, it will break eventually. And this bull market support band is rising. Okay, so you can see 87, 85, So it could come and meet it and bounce off it before going lower. So something like this could play out. You come back down to it, break and retest, and then lower. Who knows how it's going to play out? I don't know. But yeah, it's not looking good for the bulls right now. This divergence is really what concerns me. Actually, 3 divergences playing out. And also the risk metric is going quite sharply lower and suggesting risk off. Okay, so that is the video. So I hope you enjoyed this one. Just going over the fear and greed again, seeing it we're at fearful territory. It's weak. And we're extremely I think we're sort of in greed last week, but now we're in fear. Okay, we're sort of fluctuating up and down, but we're starting entering the levels where we start to see attractive prices again. Okay, to shake out the weak hands. That's just how it happens. It goes up and down. But we're in extreme greed towards the end of last year. Got to the 90s, and then we're sort of downtrending. Okay, with price. So it's finally starting to play out. We looked at a tweet by Benjamin Cohen saying that the industry is heading in the direction that it's not really sustainable for the long term, but it's just sort of a speculative hype situation where you've got meme coins launching left, right, and center, getting pumped and dumped by influencers, and you've got strategic reserves for Bitcoin or altcoins, like asset reserves, and that's really sort of playing into the hype. But I do think that's priced in, that stuff. Inauguration day, the market topped. Okay, so since then it's been going down. So really, it's all priced in. And just looking at the data from then on, looked at charts. Bitcoin, ETH versus Bitcoin market cap, others Bitcoin, Solana, ADA, so Dogecoin, and seeing they're all, and even the stock market. You look at S&P, the Nasdaq, the Russell. You go through all of them, okay? And they're all diverging. Every single one of them. They're all in weekly divergence. So suggesting that we're going to see some weakness, just the short term, before it resets, wipes out the weak hands. Just all this hype, meme coins, and that need to wipe out a lot of that liquidity, okay? Flush it all out, clean up the industry a bit, and then continue higher into the peak. Needs to be for the crypto market anyway. I don't know how the stock market's going to peak this year. I think they could go on a lot longer. It's lower risk. The higher risk stuff usually peaks first, okay? So it all depends on the real estate market as well. So checking that, and we'll do a segment on that one next week to check it back in with that chart that I didn't make last year. I didn't make it, but I showed you it and how it all plays out. So, that is very crucial to where we are in the whole economic cycle. Okay, it's just all these assets coming together. And I do see it being pretty nasty, a crash for all assets. And, just stay aware and don't over-risk yourself. And I'll just guide you through it best as I can. I'm not a financial advisor, but, take it with a grain of salt. Really, everyone's trying to figure out this market. And don't stab me in the back if I'm wrong about certain things. It's going to be wrong with a lot of things going up, okay, in this final peak. But we don't know where the top's going to be until we look at our indicators, refer to our strategies, sentiment. You've got to combine a lot of different things to really show we're close to a top. And I'll be focusing more on the crypto market because I'm a crypto investor. And I do think meme coins will continue to outperform, which is how this is. Utility coins might do okay, DeFi projects and whatnot, but meme coins are just easy to understand and easy to sell to retail. So unfortunately, for people who want the industry to grow, meme coins will continue. Or the ones with utility, the ones you want to look at too. Okay, so meme coins do have utility, so you can to cross over on that pathway, which is good. But it's easy to onboard retail for meme coins. And so that's just how we're going to head. That'll be the outperforming sector of this cycle. You've got gaming and all the rest of it. But anyway, just focus on what you know, understand, and position yourself accordingly when you have a strategy in place. So, have a strategy, execute, and I'll help guide you through it. and it's sort of less risky to invest. At the moment, it's just too overhyped and overheated. So I just see a cool off before explosive movements at the end of the year. So if you like this video, please smash the like, comment your thoughts below. So you hit that subscribe button. Check out the links below as well. And I'll catch you next one. Cheers.